All right, beautiful, beautiful, beautiful. Welcome. If you are watching this video on YouTube, thank you very much. Welcome to 2020, and my name is Tembi. Like many people call me T. I'm a trader. I trade forex, and I also trade volatilities. Okay, so basically this channel will be centered more on volatility, but today I just thought of just since it is the first video, I'll then just start analyzing from the currencies. So what I'm going to do today is every week what I usually do is every weekend what I usually do is I take some time to do some focus, just to enter the new week, just to enter a new week with clarity of purpose. I like to be definite in my analysis. I like to be definite in my analysis to know what I'm looking for. So I take the weekend just to review my week's progress and also to focus for the new week. So I do my analysis basically on a 4-hour chart. I'm not like those that do daily, weekly. I'm not really good with looking long term because I'm a day trader. I like trading 1 hour, 15 minutes, and even 5 minutes. I enjoy trading 5 minutes. I'm in love with 5 minute trading. It to me, I've realized that there is no difference between a 5 minute pattern and a 1 hour pattern. The risk rewards are always the same. In a 5 minute, I'll risk 1% of the 5 minute chart to get 3-4%. Same applies in a day. So that now depends with the person, how they are. So to me, I've realized that if I look at a 5 minute chart, 15-minute chart, maximum 1 hour, I'm at peace with that. So that's how I do my trading. So in front of the screen, as you can see, is I'm looking at the Euro US dollar for the coming week. Or maybe let me just first remove everything and we'll draw it together so that you can say, okay, what made me to come to such deduction, to such a conclusion that this coming week I'm expecting the euro to be gaining value against the dollar. All right, so that's beautiful. So what I usually do, the first step that I do so that you can understand my step-to-step process when I'm breaking down, analyzing the chart. So we're going to analyze the euro US dollar together. Then from there, I'll move from here. Then we'll jump to volatility indices, and we do our focus on volatility 75 and volatility 25. I personally enjoy volatility 75. It's just like, oh boy, it's like Nasdaq for me. I'm not a fan of Nasdaq anyway, but I enjoy volatility 75. It's just, to me, I'm minting money. I'm enjoying every trade and every setup there. All right, so let's stick to the charts. Okay, so if you're looking at my chart, so what I usually do is first I zoom it out for me to understand, okay, where is this market coming from? Where is it going? From there, if I look at the market, I'm not imposing my will to the market, but I'm just open to the market. I'm just like water. Just imagine water on the rock. It doesn't impose its way, but it just flows through the way that the rock or the ground might be saying, okay, it's easy for me to flow this way. So I'm not imposing myself on the market, but I'm just accepting, I'm just feeding off the market. It's just giving me information. For example, starting from this low, this was June last year. The market, I see that the US dollar is gaining value. This is the information that the market has given me. So I draw my line. So I don't usually trade support and resistance. I'm more like a trend line of trend channel guy that I like. I like using that. I prefer that strategy. To me, I discover that I'm more profitable with that aspect than anything. So I basically like using wave theory. So with this information now, the thing that I've discovered is then the market did this. So here I'm expecting that, okay, the market might be going up. So I'm going to show you how I do my analysis. Then from down here, I do again my same thing. All right, so you see, to me, it's very clear. This is what the market is being, this is what the market is telling me. Okay, so this is what the market is telling me. So with this information now, what now I do, I see where the market came from. I see where the market is. So then what I do now, I come to, okay, since I told you that I use Elliott wave, I then see that this was my 0 leg, this was my 1, 2, 3, 4, 5. Okay, so when the market did this, this is a 5 move. That gives me, that's an impulse leg. So now I can say, okay, the market might be in a correction phase, or the market might shoot to come and retest these highs. So I'm not imposing myself, I'm just accepting, allowing, okay, the market might come to touch that high. So that's a possibility. So whenever I look at the market, I look at the market with probabilities and possibilities. Okay, where is the market coming from? Where might be the market going to? That's what I look at. All right. So from with this aspect now, now I then look at it. Okay, we're coming from an impulse leg. Now I'm expecting an ABC pattern from here. So this can be the pattern like this, like this. So I'll be expecting a C pattern up there, then we continue down with the trend. Okay, so that's a big picture. So with this information now, I usually use my Fibonacci to identify, to forecast my C point. So my C point should be within 127 to 141 extension. So I mark that area. To me, this area will be a key area. To the market might reverse here. So with this information now, I'm certain that this market has got room for it to go up. So I've analyzed from a big overview. Now I'm zooming it in so that I can see where we are currently. So already I know the possibility of euro, that it has a possibility of it going up. So having established that now, I move now to the second phase. Now I want now to find the certain place. Okay, this week that I'm entering, what will the market do? I use the same principle again. When I use the same principle, I look at what the market has been telling me. I draw my trend lines to that. You see, this then fits perfectly. 1, 2, 3 touch, the market dropping down. Okay. Now with this information now, I then the market came here to this low. All right. So the market now here at this point here, where the market has broken my trend line, it's very important. Now with this information now, okay, so I'm going to delete this point, the APC pattern, so that I can have a clear chart like that. All right. So now with this information now, the market is now telling me an important information. So now I can do my same thing here. 1, 2, 2, 3, 4. So I'll be expecting my 5 to be up here. Then the market will be reversing. So that's what I'm expecting. So the market here is still moving. This is, then from there, I'm seeing that, okay, there's an impulse leg that is taking place right now. So this is my impulse leg. If I look at, okay, my impulse leg started here, right? Maybe let me put the horizontal line for it to be clear. So the colors might be different, the horizontal line. So my impulse leg started there. My impulse leg ended there. Okay, so this is my fifth move to touch the top. This is my impulse leg. So all that is happening, this noise is within this impulse leg. So now what's happening now with this impulse leg? Now I'm looking for the type of correction that is happening within this impulse leg. And the type of correction that I'm seeing within this impulse leg is an ABC pattern. Now, if I look at it, I'm seeing that the market is giving me a W. This became my X. Then I'm expecting a Y. Then I'm buying. So all those who want to do, who are not aware with the Elliott wave, I believe it takes some time to go. There are many videos on Facebook. There are many videos on Facebook that really explain the Elliott wave theories and all those things. And there are books that are there. Take some time to study. And there are people that teach these things. It's important that as a trader you have a mentor that will mentor you in this thing, because trading is like any other business. Whereby you need skill, you need to be mentored, you need to have someone that will tell you, okay, this is the right thing, this is the wrong thing. So now, how did we come about to our W? Our W is a combination of ABC. So now, if we go to the chart and say, okay, this is our 0 point, this is our A, this is our B, and this is our C. So this became our W. Then the market came to form our X. Now we're expecting the market to come and form our Y. So our Y, we're also expecting an A, B, C pattern. This becomes our A. I expect the market to pull back up a little bit, then come to test the lows. That makes us Y. Then we're going to go long. So here we are expecting a long position from this horizontal, from this support level, in sync with where the impulse leg started. Our stops will be just down there, and we'll be expecting a long position to the upside. So that's what we're expecting now when we look at our Euro USD. So basically, when I'm looking at the Euro USD, I'm expecting that. So I'm expecting to go long this week, and I'm establishing the zone where I'll be looking at my long position, and this is my zone. This will be my zone of entry. So I'm expecting the market to come to retest these previous lows, and there's a trend line support here. So there are many factors: 1 support zone, 2 support zone, and 3. And now this market is in a sideways motion. So this is a correction phase. So now I'm expecting another impulse move in the same direction. So now applying the AB equals to CD pattern, I'm expecting that the market will spring up the same distance, which is like that. Our impulse leg, the same distance. So that's where I'm expecting my market to shoot up. Then when it comes there, it's now concluding our 1, 2, 3 touch up there. Then you'll be going short, because overall the market is in a downward trend, and where we are trading right now is just a correction phase. So when it comes now to the Euro USD forecast, this is what I'm expecting. This is what I'm anticipating. So this week, when it comes to Euro US dollar, I'm only focusing on buying. So if this insight is really there, so what I then do with this after I've done this, I then take a screenshot. Now I know what to do. So I'm no longer approaching the market. I'm no longer reacting to the market. But what's happening now is I know exactly where to get in. I know what I'm looking for. With that approach, whatever the market can do, whether it's going up or it's going down, I don't care. I know where the market is going to. So within this upward move now, I'll be expecting, yes, definitely to be scaling. So here I'm expecting I'll be risking the risk reward ratio. Really, it's fantastic. So that's what I'm looking for. So it's 0.22%. So if we multiply it by 10, I can say I'm risking 2.2% to get 18%. That's a good risk reward ratio. So it's a 2% to get 18%. That's 1:9 return. So that's a good return. So when it comes to Euro US dollar this week, I am looking for a buy. So expect the buying areas there at 1.1070. That's where we'll be looking to go long. And that's what I'll be expecting this week. Okay. Now, coming again on the aspect of now when we let's do another one. Let's go to our pound dollar. Okay, so our pound dollar, this is our pound dollar. Same process, same procedure, nothing fussy about it. It's just the same process, same procedure. What you do, you zoom out, you get the feel. Where is the market coming from? Where is the market going? Like I said before, the market tells us. We don't impose ourselves. We identify the loss. There we go. 1, 2 touch. We are up there. We go now to our upward, because our upward is giving us the same the same information. There we go. There we go. So with this information now that we have here, this is what the market is telling us. Is it a nice thing? Nah, it looks messy. But anyway, now we then zoom in to understand, okay, from this information, so this is where the market, what the market has done. Now, with this information, now we then zoom in to say, okay, what am I expecting this week to happen? So this week, what I'm expecting to happen, simple again, look at this information. Nice, nice. This is my impulse leg. Within the impulse leg, there is this correction. Now, within the correction, the market then gives us a pattern. There we go. And the pattern is slowly, nicely in sync with our main bottom trend line. So now with this pattern, now we're seeing a channel, something like that. So this is what we're drawing. And beautiful, you see how the market respected our channel here at this point, the trend line, upper trend line at this point gave us a nice descending channel. So this is 1, 2, 3. So now we're expecting a third touch, then the market will be shooting up. So this is what we're expecting here. We're expecting this market to shoot down, to come and touch here, then the market shoots up to go and retest the previous highs. So that's what we are looking at. All right, so our analysis on pound US dollar is telling us that the dollar is weakening. Same applies with the euro US dollar. Our analysis was telling us that the dollar was weakening. So which means our analysis are not contradicting. They are both agreeing with what the dollar has been saying. So now applying the ABC rule, I'm taking the move, the inner move of what happened here. I copy it and I say, okay, so now I then establish the possible area where the market might come touch. But I like to do this in conjunction with Fibonacci. To me, Fibonacci has been working very well, especially the extensions. I then draw my extensions from this leg to identify the 127, 141 extension as my possible reversal area. Apologies about that. Okay. So this is my perfect place. All right, so having established that, now I know this is where I'll be seeking to enter. So now what I'm looking for now when it comes to pound US dollar this week, what I'm looking for, the market might try to go up to retest the highs, but definitely I'll be selling. You get it? Okay, so let me draw it nicely, nice and clear. So here I'm expecting the market to try and go up, then I'll sell for me only to buy the market to shoot up like that. So that's what I am expecting on the dollar. So when it comes to the dollar, I'll be expecting a sell in this position, and then I'll be expecting a buy in this position, in this zone, going long. So you see, I'm approaching already my week, knowing where to sell and where to buy, because already this is in a pattern. So now if I apply the same impulse move from here to there, okay, it might not go up to touch the previous highs, which is this one where I anticipate it to go, but my first take profit will be, okay, what's happening now? Okay, my first take profit will be here. This is what I'm expecting, where the market will be. Then from here, I'll then see what the market will do, because the market has to tell me whether I'm continuing going up or I'm continuing going down. But when it comes to euro US dollar, I'm expecting that. So now you see, with my analysis now, this is where the impulse leg started, and that's where. And if you look at it, I'm expecting the market to break the previous impulse leg, then shoot up. So most traders then, when it comes to that point, they'll be expecting to sell because the market has violated structure. That's why I don't like support and resistance. That's why I personally prefer just to trade the trends, just to take in what the market is telling me, and from there I move on to I move on to another thing. So yeah, basically that's it. So today I'm just doing those two focus. Euro US dollar I'm expecting to buy, and also pound US dollar I'm expecting to sell and to buy. So we will see what the market will do tomorrow morning, which is Monday. From there, we'll then see if the market can retrace and shoot down. Then from there, we're looking to buy from that zone going up. So basically that's it when it comes to my forecast here. All right, now for a quick one, let's move on now to volatility. We want to see what volatility has for us. Okay, I'm just opening the charts on volatility. We want to see now on the volatility what the market has installed for us. We want to see whether the market this week, when it comes to volatility trading, the market is in good books with us, or we are on the wrong side of the market. We want to see the opportunities. We want to really establish which direction we'll be taking on today. All right. Beautiful. So there we are, volatility. So here I'm going to do basically the two. Basically, I'm going to do two. What do you call this? I'm going to do two indices, which is volatility 25 and volatility 75. All right. Having established this now, let's move on to volatility 75. We'll start with volatility 25. Now, if you look at volatility 25, the market really. You see, it's very clean, nice. I like it when the market is like this. Same applies, guys, like how I did it before. Previous high, I just connect the dots. I don't impose my will to the market. If it's fine, it's okay. I'm just taking what the market, I just link the lows. Something like that. Okay, so you see, now the market is broken down here for many days, and the market is continuing going down, just like here. Let's move to see if I link with this low to this low. You see, the market from here, when the market broke, closed below here, it shot back up. But now on this side, now it's a different case. The market here, it has broken, and it broke with a gap, and the market has been going down. So here now, with the information that is in the chart, we don't know how far the market might go. But now this is where I like Fibonacci. Then I took from this low to the previous high, which is that high. Now I'm expecting the market to retrace by 127 extension to 141. And this is my zone, and the market is playing there. Do you see? Beautiful, clean, clean, clean. So I like Fibonacci in conjunction with this. It gives me clarity, zones where the market might reverse. So currently, with that information, I now know that, okay, the market is at a place where by now it might shoot high. And I know that if the market is now shooting high, this market, it can gain a momentum for it to come to retest these highs. You see? Now, if I go now to my wave theory, I see that the market came with, this is a five wave move. So this will be our 5. So now I'm expecting an ABC pattern coming in as a correction. Let's put the ABC pattern as a correction. So here now I'm expecting an AB, maybe something like this, B, C. Then we continue going down, or this continues to become a 1, 2, 3, 4, 5 going up. So with this now already, I now know that, okay, this is what I'm expecting from the market. This is what I'm looking forward to the market. So with this information now, I'm now looking at, okay, the market is at a zone. Volatility 25 currently is at a zone whereby I'm looking for buys. I'm not looking for sells. So with that in mind, then I change from the daily time frame to 4-hour time frame. Okay, so let's see what the 4-hour time frame has installed for us. Beautiful, beautiful. So in the 4-hour time frame, the market also has to give us some patterns to see, okay, where we are. Okay, so I'm now going to delete these wave 1, 2, 3, 4, 5 and ABC indicators. All right, so now the market is now clean like this, and this is where our channel ended. The market, this is a breakout. So from this breakout, if you look at it again, just drawing the market, what the market is telling us. I use trend line. Remember, I don't use support and resistance. So from this low to this low, I'm expecting now a 1, 2, 3 touch. Okay, so the market did 1, 2. So here, because the market, this is not an impulsive leg, but this is a correction phase. So instead of 1, 2, 3, I'm now doing an ABC pattern. So this is 0, A, B, C, D, E. No. I drew it wrongly. So it should read as it should read actually is 0, A, B, C, D, E. Yeah, something like that. So here now A, B, C, D, E. Here now I'm expecting the market to go to the upside. So with this information now, I'm expecting to make my entries here. So this is for those who are trading for the whole week. Make one trade a week on the market. This is what I'm expecting the market to come. The first take profit to be there, and the second take profit is up there. So, but I'm entering the market with that in mind. But there are then bus stops at place. The market might come, find support at this zone. So this zone will be I'll be looking forward to this zone. Then if the market breaks this zone, then the market, I'm expecting it to shoot up to come and retest these highs. So as I'm looking to make a buy option here, I'm making a buy option with that in mind. That's what I'm expecting. That's what I'm looking forward to. So this is what I'm expecting. So with this information now, you see, this is my 127, 141 extension zone. And within that, the market is giving me a descending channel. This is a descending channel. And I see one A, B, C, D, E pattern. And I'm confident that the market is going to give me an entry here. Then I'm going up. I'm going on a long position. So that's what I'm expecting on volatility 25. So my analysis is just simple and straightforward. So that's what I'm looking for. I'm good to go. Then from there, I'm going to volatility 75. Let's look at volatility 75, my favorite. Oh boy, it is, you know, this one has been hammering, it has been hammering people very bad. Most people have been expecting, what do you call this, the market to be going down. Like for example here, most people are looking for selling opportunities, and I was just hammering with buys. This was a nice move for me. I enjoyed, I harnessed that market nicely. All right, so same procedure, guys. We go back to the chart, identify the low to the current low, the possible third touch. That's what we have. Same applies with the highs, from this high to that high. Okay, so if you want to more, you can then message me personally. Then you can undertake a training. We can undertake a private training webinar together, so I can teach you my strategies, how I trade, the way I trade, how I look at the market. Everyone has got an individualistic approach to the market. Okay, so with this information now, I'm seeing so now let's go to, so that you can see how I think. That to me, I see the market easy. This is my first leg, 1, 2, 3. I'm expecting my fourth leg here, 4. I'm expecting the market to be going up higher, further. So this is what I'm expecting when I'm looking at the volatility 75 from where it is. That's what I'm expecting. Now, with the correction that is taking place here, I'm foreseeing that this is an ABC pattern. It's becoming 0A, B. I'm expecting a C. So a C usually falls within the 127 extension of my AB, of my 0A extension. So there. So now I put my zone 127 to 141. This is where I'm expecting to go long. You see? Simple and straightforward. So this is where I'm expecting to go long. to buy. So here, if the setup gives me a selling opportunity to this place, no, I'll only look at this chart when the market comes here. So I'm seeing that there's still room for it to come down. When it comes down, I'll be looking to buy from this position. So this is my zone. The market has to get there. Now, for you to see that trading is very nice if you know what you're doing. I use A-B patterns. I take my A-B pattern there, you see? 0A, BC, 0A and BC is equal. And my 127 extension is also there. So that's what I'm expecting. Then from there, I'll be expecting the 2 to 3 move to take place. From there, that's what I'm expecting from here. So now, if you ask me, what am I expecting? This is what I'm expecting. I'm expecting to go long this week on volatility and 5. I'm not looking to sell, but I'm looking to go long. That's what I'm expecting. That's where I'm looking to make my buys there. So let me delete these things so that you can see how clear it is. So you see, I've drawn. So this is what I'm expecting. Then when it comes up there, it becomes my 1, 2, 3, 4, 5 touches. With this aspect now, I'm expecting an APC pattern. Upon the 5 touch there, I'm now looking for shorts. So that's what I'm expecting on my volatility 75 on an 4-hour time frame. So this is what I'm looking for. So we'll see what the market will do from there. But basically, this is what I'm looking for. This is what I've been I'm waiting to do. So the market now is just so clean. It's just so clean. I now know, you see, after doing that messy analysis, now I look at this now. I'm just waiting for the market to come to my zone and I'm good to go. And now the tip for the week is, remember, never react to the market. If you react to the market, you're prone to make many mistakes. Trust me, believe me. I've been trading for over 4 or 5 years now, and I can also have been trading for over 4 years, 5 years, because the first 3 years, 3.5 years, I was money driven, not process driven. I was more conscious of how much can I make instead of am I doing it the right way. Guys and girls, do you realize that money is a result? Money is never the goal, but money is a result of the goal. For example, those at work, you go to work, and as you are going to work, the result of you going to work is money. So the objective is not money. The objective is to go to work and do it perfectly. For example, a doctor. You see, a doctor goes to 7 years to practice to qualify to be a doctor. As they do that, as they embark on that, after attaining the skill, money then locates them. Same applies with trading. When you're embarking on trading, if you're a new beginner trader there, don't go for money. Get into the space, get into trading with the pursuit to understand trading, understand the markets. What differentiates between professional traders and amateur traders in my own journey is professional traders have come to a level or to a state that they understand the market. And amateur traders, they don't understand the market. They react to the market. Like now, you see, the market is what we call market cycles. But we don't have much. I don't have time for me to explain in these weekly forecasts, weekly overviews. But I think in the description below, there's my email there. Send me an email if you want to understand all these things. And we can talk from there to understand that trading, seek skill, seek understanding. And there are many good mentors out there that are willing to work with you if you are willing to put in the work. I tell traders that I work with that give yourself 6 to a year without looking for money. Just say, okay, for this 6 months, for this year, I want to be the best person I can ever be in terms of understanding and analyzing the market, which means you have to put in hours of backtesting, hours of reading materials, hours of looking in the charts, identifying different patterns, identify their different variations. So okay, now I understand the market cycles. Then when that blueprint is one with you, whereby it now becomes your second nature, whereby when you look at the market, you know what's going to do. Like now, I know that, okay, that was my first leg. Now the market has done my second leg. Now I'm expecting for the third leg. So I'm expecting to buy there. If the market then doesn't do that, because the market can then do this let's go to the chart. If the market can then do this, the market can then come there, right? And the market does this, and the market does that. You see, it didn't do. Then I know that with that, what it did, it has applied again the same principle like that. It always obeys. I'm trading the same thing with understanding. That becomes my 1, 2, 3, 4, 5. Now I'm expecting to buy from there, going to the upside. You see, I know what the market is doing. So here I don't have time to set the probabilities, the possible and the probable. Maybe the next weekly forecast, I'll then set time because then I'll be focusing only on the volatilities. Today, the pound and the euro took time. So next week, I'm just focusing on volatilities and 5 and 25, the indices that I trade personally. Then I'll then give you guys the probable and the possibility. Okay, so then there'll be a link description below if you are saying that, okay, how then do I get into the space of trading volatilities? There's a link, you click on that link, it will take you open an account with binary.com, then you go to volatility indices, you download the MetaTrader 5, then you're set to go. You just email me, then we'll be good to go. Anyway, thanks for watching. Till next time, remember, plan to trade your market altogether. Don't react to the market, but always trade your plan. Thank you very much.